Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Kevin McNew. Today is Tuesday the 10th and we had a WASDE report out this morning. But before we get to that, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 3 1/4 cents, soybeans down 8 1/2 cents, and wheat in Chicago down 8 3/4 cents. Now, Kevin, following this report, what was very interesting is it seemed like some of these numbers would, at face value, be bullish here. We had some reactions to the upside immediately following the report. Soybeans traded up to as high as 9.86 on the day, finished off at 9.70 here. What do you take away from not only the report numbers, but the way the trade reacted to it?
Yeah, it was a very interesting day, Cody. February WASDE reports are generally a yawner. We don't get too excited about them because there is no real hard survey data to support USDA's changes. It's things we traditionally observe, like export sales or ethanol. And so when USDA revised their ethanol number, yes, that was a surprise maybe, but it's not going to get the market real excited. The market really looked at these numbers and said it's really the same old thing. We have abundant supplies of corn and beans, not only in the U.S., but also globally. South America's numbers changed a little bit on the fringe, but did nothing to really negate the fact that their supplies are going to be record large again this coming year.
Absolutely. Let's look at ending stocks because it is kind of interesting. We did get a cut in ending stocks here for corn, down to 1.827 billion bushels here, down 50 million bushels compared to that January report. Soybeans came in, it declined down to 385 million bushel carryout compared to a January report of 410. So both of those are lower than the average analyst guess. You'd think that'd be bullish here, but it was met by some selling here. Wheat came in. This was one that came in a little higher than the average guess here with 692 million bushels here. Average analyst really only expecting about a 2 million bushel increase, but got a 5 million bushel. I think there's nothing really to write home about there. But I guess my question is, we did see a decline in ending stocks for soybeans. We saw a decline in corn ending stocks. But why do you suppose we had this selling?
Well, again, Cody, I think the market is focusing on the fact that we're past the U.S. production season. Now we have a really good grip on the South American production season. And, let's be honest, we've been trading at a premium to what some might call fair market value based on stocks in the U.S. and globally. And so I think the market is starting to come more back to reality, if you will, a little bit, that we do have maybe not burdensome carryout, but we have ample carryout. And so I think it's going to be more a defensive market, a bearish market as we move forward than a bullish market. And I think bullish rallies are going to be hard to sustain, in the current environment without some major, disruptions, mostly on the supply side. Then that may have to wait until we get to summer for the U.S.
Absolutely, and I think when you look at South American production, that was another reason why we probably were met with some significant selling pressure here. You look at Argentina, we saw an increase in actual estimates here for production out of Argentina, increase for corn and soybeans. Brazil, you look at that, and corn production there unchanged from the January report. But when you look at soybeans, it was down only 1 million metric tons. I think the way traders, digested these numbers here is that, yes, we were following soybeans in Brazil in particular. The northern region had a very, very dry January raining season. And so what we saw was definitely crop disruption. We saw crop losses up there. But the problem is that when you look at it now, is only 1 million metric tons. It was completely negated by an increase in Argentina soybean production. And I think some traders may say, well, the USDA may be waiting. They may be waiting until next month after more harvest data has come in. We've only really started ramping up harvest. But I think that even after that, even if we do get a revision slightly lower here in soybean production out of Brazil by 1 million metric tons or so, we still have a significant crop that we're trying to deal with. We're still going to have to be very competitive with them on the global market. And I think that was seen as a relatively bearish overall influence here on soybean prices today.
Right, and Cody, I think if I'm a producer right now, I really got to start looking at my marketing options fairly seriously. I think there's probably a lot of people who are still sitting on old crop that's unpriced, and especially a lot of them that are not looking very seriously at new crop situations. And I know farmers are looking at their cost of production and saying, you know, I'm hovering right around that now, or maybe I'm even a little below water. And you know, what should I do? And you know, you got to be mindful of the fact that the market doesn't care where your cost of production is. It's going to look at basically where the global balance sheets are. And I think there's still a lot more pain that can be coming, you know, in the coming 6 months, and especially as we get into the U.S. growing season, without any sort of major hiccups. I think these markets are poised to continue to move lower.
That sounds fair enough. Guys, if you have any questions about how you can shop around for options that may be right for you in terms of protecting that downside risk, give a call to the office. Number's 877-472-4607, or you can go have a 14-day free trial of our trading platform where you can open up the options chains, get an idea of what the bid and the offer is, how much that option is going to cost in order to protect that downside risk. If you have any questions about it, give the office a call. Look forward to speaking with you, and have a great day.